Well, let's try and understand the energy and commodity construct, and who better than Dr. Jeff Brown, president at FGE, joining in on the show right now to talk about exactly that. Jeff, hi, great to have you on ET Now.
Thanks for having me. A lot
Right.
going on in the market.
Right. Jeff, let's pick it up with oil first, because that's been on sort of a downward spiral, if you will, since about mid-January, and there has been concern around lackluster demand outlook. Tell me, are the concerns around global growth and impending slowdown, are they for real?
Yeah, the market goes back and forth between focusing on sanctions issues and then on the economy. Lately, obviously, it's been focusing on the economy and worries over Trump tariffs, really, and slowing the global economy down. We do believe that it will start to refocus on sanctions again once news starts to emerge of what the Trump administration is actually going to do related to the Iranian sanctions. So we think we're going to bounce right around this sort of 75 to 80 range, and will continue as the news flow, sort of bearish and bullish news flow, keeps rotating ahead.
Up until the sanctions, the market was a little worried about a global growth slowdown. Do you think the concerns around a slowdown are for real? And is that what the oil market is pricing in?
Yeah, I think the concerns are real, okay, in the sense that Trump is, again, and China's slowing down. That's been sort of priced into the market already, and we know that. I think the uncertainty lately is how all these sanctions, the tariff issues will play out. And Trump is creating a lot of uncertainty, right? So no one really knows, and markets don't like uncertainty. People don't like to invest in an uncertain environment. So we think the market is starting to price that in. It remains to be seen how Trump is going to play this through. In the sense, is he going to put tariffs on? Is he, threaten and then pull them off like he's been doing, or will he put lasting tariffs on like he has so far done with China? So it's a big wild card, and the market doesn't like wild cards, right? And the global economy doesn't like wild cards. So that's why I think the impact that we're seeing right now, especially over the last couple of weeks, both for the global economic perceptions and also for the oil market.
Sure. But, Jeff, the one thing we know for sure is that Trump is definitely going to want higher oil prices and production, right? With his infamous phrase, drill, baby, drill. What do you think that's going to mean for the global demand supply dynamics of oil?
Well, a couple different things there. I mean, one, obviously, he wants a lower price. He's talked about increasing U.S. supply by huge numbers. The reality is there's not a whole lot he can do. We have to remember that supply increased, crude production out of the U.S. increased by about 2.8 million barrels a day under Biden. So it's basically driven by price. He'll make it a little bit easier to drill in some areas, but realistically, most of the drilling and most of the shale oil that's been the big growth story out of the U.S. is just not on federal land. So that's more of a story, more of a talking point. He talks about lower prices. He's been pushing OPEC to lower the price. It seems like Trump likes a number that's sort of in the low 70s in terms of dollars a barrel. There's a little bit of difficulty here, because if the price pushes too low, many of his advisors will know that U.S. won't increase production, and that'll hurt the U.S. oil industry, which is obviously something he cares about as well. So he seems to want something in the low 70s. OPEC is probably more upper 70s, 80s in terms of a natural balancing point. And we expect that they'll probably keep debating this through all of 2025. So this sort of back and forth between Trump and OPEC will continue.
I was just going to come to that, because OPEC Plus is actually sticking to its policy of gradually increasing output from April. So, since it's going to be a tug of war, like you rightly said, where do you think the oil prices are going to settle down? Any range that you call out or foresee for 2025?
Yeah, it's actually sort of a little bit more of the same, in the sense that OPEC has a lot of spare capacity available still. They have this plan to increase production, but if the oil prices drop, they probably will continue to roll over the cuts like they've been doing. So OPEC is acting as, in this moderating role. Obviously, they'd like to put more oil back in the market, but we also know that they want prices to be up in the 70s at least. So when you look at all the various factors out there and the count that they're pushing against each other, and we discussed many of them already, it really points to prices bouncing around this. We think of the first half of the year, probably 75, 80 range. Second half of this year, it could drop more into the 70 to 75 range. But broadly, 70 to 80 are where the natural forces are pushing this oil market this year.
Jeff, tell me, what role would, the tariffs on Mexico and Canada and the kind of back and forth that we've heard so far, what role does it have and bearing does it have on oil prices?
Yeah, the market reacted to that, right? And it does have an impact in the sense that it would make it, it creates a lot of friction in the market and oil getting down into the U.S. I mean, U.S. refiners basically will have to run a little bit lower. So what it means is we saw the product market specifically react, which can affect Indian refiners in the sense that the market started to price in that U.S. refiners would run at lower rates. So it starts to get into a little bit more complicated dynamics of how, those internal trade flows in North America. But the bottom line is it actually helped refiners. If they put these tariffs on, it can help refiners globally in the short term, in the sense that it would lower refinery runs in the U.S.
Right. So since, predicting Trump and his moves is going to be futile, let's try and predict what the OPEC is going to do. Do you think they will change their stance?
Well, it's not surprising. They recently said, okay, we're going to stick with our plan to bring back barrels from April, right? And that wasn't really that surprising. They won't make any real decision on it, we think, until it gets closer. The decision period gets closer. Ultimately, it will depend a lot on price, right? We think if the price is up in these dancing around this mid to upper 70s, we think they will bring back barrels for at least a few months, test the market, especially if Iran sanctions are up in the air right now, how strict they will be. We expect that we'll lose about 500,000 or 600,000 barrels a day from Iran, and that will give room for OPEC to bring back some barrels. Iran may not like that, of course, but OPEC will probably bring back. We think at least for a quarter. We're building in sort of at least 3 or 4 months where they bring back barrels.
Sure. Jeff, tell me, with Trump's focus on oil, do you think that sort of puts the entire clean energy transition theme in the backseat?
Yeah, I mean, he loves oil, right? He loves hydrocarbons. I think certainly for the U.S. it does, in the sense that a lot of the big investments, which you're probably aware of, the Inflation Reduction Acts, or the IRA in the U.S., some of that will remain, but much of it will get pulled back. I guess the broader question is how this affects the narrative globally. We had already seen with the Russian-Ukraine war that some of the enthusiasm for going green quickly had sort of pulled back a little bit globally. We do think that Europe will continue to press ahead, but when we look at the rest of the world, it is slow. It is sort of slowing, right? The enthusiasm is slowing. There's a lot more conversation on costs and how we can plan sort of more rationally about this transition rather than just going breakneck into very expensive areas that will raise costs for consumers. So he's definitely changing the narrative. Frankly, we saw it recently at Davos as well. I think that the conversations had changed a little bit.
Yep, interesting times, and one can keep just second guessing what the next move is going to be and the implication on oil markets. But Jeff, so good having you today on ET Now. Thank you for your time.
Certainly my pleasure.